Welcome to the deep dive. Okay, imagine your grocery bill actually shrinking for a change. Or maybe that gadget you've been eyeing feels, well, a bit more affordable. In India, for quite a few people, this is sort of becoming a reality. We're diving deep into India's retail inflation numbers today. They just saw a really significant, almost historic drop back in July 2025. And for those of you listening, maybe especially UPSC aspirants or economic students, this deep dive isn't just about the raw data. It's really about getting under the hood, understanding the economic concepts and what this all means, the implications.
That's exactly right. And to really unpack this properly, let's maybe start with the basics. What do we actually mean by retail inflation?
Good point. Lay it out for us.
Well, simply put, it's the rise in prices of goods and services that, households like yours purchase pretty much every day.
Hmm.
In India, the way we track this is using the Consumer Price Index, or CPI.
Right, the CPI. So that's basically the nation's shopping basket tracker.
Precisely. Yeah, you could think of it like that. The CPI follows the price changes for a fixed basket of stuff, goods, and services that people commonly buy. It captures those consumer-level price shifts, which makes it different from, say, the wholesale price index, the WPI.
Ah, okay. How's that different?
Well, WPI tracks prices more at the producer or wholesale level, and importantly, it doesn't include services. But the crucial thing here, especially for policy, is that the Reserve Bank of India, the RBI, uses this CPI-based retail inflation. It guides their monetary policy, their interest rate decisions.
Got it. And it's released by the Ministry of Statistics and Program Implementation?
Correct. They're the ones who put out the numbers.
Okay, so let's get to the headline figure because it's pretty striking.
Well,
India's CPI-based retail inflation, it just plummeted to 1.55% in July 2025.
yeah, 1.55%.
That's its lowest point in 8 years, and actually the second lowest ever recorded under the current CPI series. It was just slightly lower, 1.46%, way back in June 2017. And maybe more significantly, for the first time since January 2019, inflation has actually slipped below the RBI's target comfort zone of 2 to 6%. So the big question, what on earth drove such a massive drop?
Well, the primary driver, the main force, really, was a sharp fall in food inflation. It actually went into negative territory.
Negative, you mean prices went down?
Exactly. Down to minus 1.76%. So on average, food costs less than it did a year ago. And vegetables in particular saw a huge year-on-year fall. We're talking 20.69% down in July. That's their lowest point in almost 4 years.
Wow, 20%.
Yeah. And this was helped quite a bit by something economists call a favorable base effect.
Okay, what's that in simple terms?
It basically means that prices were quite high in the same month last year. So even a moderate price level this year looks like a really big drop when you compare it year on year. It exaggerates the fall, percentage-wise.
Right, the comparison point matters. That 20% drop in veggies must be a huge relief for household budgets, though. But like with most economic data, there are usually layers, aren't there? While the year-on-year picture looks great for food prices, what about month-on-month, from June to July?
Yes, that's a really crucial distinction to make because while year on year was down, if you compare July 2025 to just the previous month, June 2025, food prices actually rose.
Grows, okay. By how much?
They went up by 2% in that single month, and this monthly jump was mainly because of higher prices for specific things, like vegetables, actually.
Even though they were down year-on-year.
Yes, month on month, vegetables were up 11.6%. Also fruits, edible oils, eggs saw increases compared to June. But interestingly, non-food prices, they were very subdued. Clothing and footwear up only 0.2%, housing 0.5%, and fuel actually dipped slightly, down 0.1%.
So a much more mixed picture month to month.
Okay, and were these trends playing out the same way across the whole country, like rural versus urban India? Not quite. And this difference is actually quite interesting. Rural inflation hit a record low, just 1.18%.
A record low.
Yeah, which seems to suggest strong supply in rural areas, maybe weaker price pressures too. Urban inflation was 2.05%, also very low, near record lows. But urban consumption growth still seems a bit weaker. And it's worth remembering that rural demand seems to be recovering faster, maybe helped by good rains. Rural India is a huge part of the economy, right? About 47% of GDP.
That regional difference is definitely something policymakers have to watch closely. Okay, what about core inflation? That number that strips out the bouncy food and fuel prices to give a clearer underlying trend.
Right, core inflation. It did ease slightly. It fell to 4.1% in July, down from 4.4% in June. The main reason for that slight drop seems to be slower price rises in things like education and personal care items. But here's a fascinating point within that gold prices. They are still a major major upward pressure point,
Gold. How much?
up a huge 36% compared to last year. 36%. Though the monthly increase did slow down a bit in July compared to June.
36% still massive year on year. Okay, so pulling all these threads together, what does this actually mean for, the average person, for the wider economy, and crucially for the RBI and its monetary policy?
Well, this definitely raises some big questions for the RBI. Such low headline inflation, well below their target range. It could give them much more room to maneuver, more flexibility.
Flexibility, like
Yeah.
cutting interest rates.
Potentially, yes. If they feel it's needed to give growth a boost, it certainly opens the door for that discussion. For the economy overall, lower inflation is generally good news for consumers. It boosts your purchasing power. Your money goes further. That can help encourage spending and demand. It could also be a signal of healthier conditions on the supply side of the economy.
That's a really comprehensive look. It's amazing how one statistic, this inflation number, reflects so many different economic forces, base effects, monthly shifts, rural-urban dynamics, even gold prices. And the implications are huge.
Absolutely. And if we connect this to the bigger picture, for the students listening, this data makes you think, what happens if we see a sustained period of very low inflation, maybe even below the RBI's target range for a while? How might that influence longer-term decisions about investment, about employment? Does the RBI go for growth now, or does that little month-on-month rise in food prices mean they should still be cautious? It's that kind of thinking, connecting the dots, that's key. Definitely something to ponder as you continue your own deep dives into economics.